Hi again, this is Rick with AmazingAccuracy.com. Today is March 29th, 2016. It is currently 12:22 p.m. Chicago time. All right, we're currently looking at a monthly time frame chart of crude oil. And what I want to draw your attention to is a little bit of what has happened in the last few months and what we could be expecting to occur in the crude oil in the next few months. So let's back up to a little bit of history here. Each one of these represents a month of trading in the crude oil market. I want to bring you back over to here. This was the last bottom that was made prior to just last month. This is August of 2015. As crude oil was declining into August 2015, it found support, and then prices rallied for 2 months overall. The in-between month really didn't do much in the way of rallying. However, prices did, after 2 months, exceed previous highs since putting in that bottom in August of 2015, and made this monthly swing top in October of 2015. Then from there, prices declined once again, resuming the downward trend until last month, which was February 2016. We are currently just concluding the month of March. Today, again, being the 29th, so there's just a couple of more days of trading to complete this monthly price bar, which is likely not going to do anything in the way of taking out February. So February, we're pretty much locked in as the last swing bottom of the crude oil market. Now, what is the significance of looking back in recent history? This here is the seasonal data report for crude oil. Now, this is found in my software application called Provisions Trading, which is provided for free to our premium members of the F-Dates Market Timing membership. An incredibly valuable program for tools such as this seasonal data report, as you're going to see here in a second. Notice that it highlights the month of August. This is last August, and it shows this colored in peak valley, showing that it has a very high seasonal tendency of producing a swing on the monthly time frame. Well, we saw that was the case back in August 2015. Then it is followed here by October, as you can see, and I just scooted that off by accident, I apologize. We can see that October was the following marked off peak valley, and that corresponded well with what actually happened here in October. Then we can see that prices are marked for the following February, which we've already discussed was last month, which was the most recent swing bottom. Looking at recent history and aligning it with what we have in our indicator here gives us confidence in that the information that it is presenting to us for the near future could be highly relied upon. And in this case here, we can see that there is something going on here for June. And I notice a color change here, which means that May is kind of a historically bearish month here, is what that's implying. So what I want to bring attention to is that June is highlighted here. So based on seasonal tendencies, we see that these previous months hit exactly on target. And we come over here and we see that June is to be anticipated, which is this upcoming June, for a potential change in the trend for the crude oil market. Now, moving that aside, I'm going to bring in another indicator here, and this here is the historical cycle pattern. It's a dynamic cycle extraction indicator found in my F-Dates 2000 application, which I use to generate my weekly F-Date report for daily and weekly turn dates. Now this is a monthly indicator here that I have pulled up, and you'll notice here that it has highlighted August 2015, October 2015, followed by February 2016, and then May 2016. Now this is based on a good, I'd say 20 years plus of data that the dynamic cycles have been extracted. This is not a seasonal indicator, as I've already shown. This here is an actual cycles extraction application, or indicator, I should say. The application itself contains many different algorithms. This is just one of several algorithms. Now, I highlight this because when I align most recent price action to the historical pattern here, and I see that they were accurate, that gives me confidence on the next piece of information. I don't care so much about what's going on here. I'm caring about what's going on next. Everything is to focus on what is likely going to occur next. As data comes in, when we go to May and June and so forth, and we've accumulated that data, then if these are still the same as they're showing now, great. If not, they may adjust based on new data. So you always want to go with what's most recent. Now, you may say, well, yeah, it's pointing to August and October because we already know August and October. Well, that would not be correct, because this application was set for July, the month of July of 2015, of where we loaded data up to. So this calculation here does not include any data past July 2015, which is back here. So all this is actually a prediction based on data that goes only up to July 2015. So what is the interesting thing that we can take from this? Well, if you'll notice, first off, that the August, the October, and the February, which is accurate, also was an exact agreement to what we saw with the seasonal data report. But the difference is where we're looking at June here, although May has this color change, we're looking at June here. On the F date itself, it's looking at May, with the recent cycle patterns looking at June. So here, the historical, which takes in all data up to July 15th, where this takes in only 5 years, or 5 cycles, not 5 years, 5 cycles, cycle threads. And it's a little hard to explain, but cycle threads is not, it's not actually a whole year for each thread. But anyway, it'd be too technical, and then we don't have that much time on this video. So what I just want to say here is this is more recent, a very short-term view, and this is a more long-term. So we're looking at May, and you can also look at June if you like here, but this is in agreement with the seasonals in that it's in the same ballpark. It goes from February to June for the seasonal. It goes from February to May for the dynamic historical cycles, which tells me that come May, June, we should expect a trend change, another trend change, such as that's a trend change, that was a trend change, and so is this, because this is monthly time. If you look at it on a daily time, you're having several weeks of the market moving in a new direction. We should look for a trend change in the crude oil market come this summer, starting around the month of May, June, for another monthly swing. Now, because February made a swing bottom, we may naturally assume that it's going to go up until May, June, and it may very well do that. However, I don't like to assume I prefer to actually see which way prices are moving as it enters that next forecasted period. So in other words, when we come into the month of May, if prices have been moving up, yes, I'm going to be looking for a monthly swing top to be forming in the month of May or June. However, if the trend happens to be moving down into this summer, coming into May, June, I'm going to be looking for a monthly bottom. So I'm more interested as to which direction prices are moving as it enters a forecasted time period for change rather than anticipating whether it's going to be top or bottom long before it has even arrived at that period. Because if prices are, for example, rising into May, June, then I can prepare myself to start looking to go bearish the crude coming out of the May, June time period. And vice versa, if prices are moving down as we enter into May, June, then I'll be looking to become more bullish as we move out of the May, June time period, because this is a more longer term situation here. So I'm always careful not to just assume, yes, that we've made bottom in February, prices will just go up until May, June, then go down. Because sometimes we just get these little nasty things where, for example, we're expecting a bottom in February. We got a bottom in February, as you can see here and here. And then it goes and starts going back down, making the February, March pair as your turn and then going down into summer. So I like to avoid those little nasties when I'm making any kind of forecast or preparing to trade a market based on a forecast. But I thought you would find this interesting because now you can be anticipating the crude oil market to change trend come the month of May and June. And we'll likely revisit this later on when we come to June, July, and so forth. We can look back and see how things worked out. All right, well, thanks again for watching my video. And if you haven't done so already, please subscribe. And I'll see you in the next video.